Hello, everyone. Thanks for watching my Conic investor presentation. My name is Justin Cochran. I'm the CEO of Conic Metals Corp. This presentation is up on the website, so please go to the website and download it if you haven't already. There is a disclaimer at the back of the presentation regarding forward-looking statements and information, so please keep that in mind. So I will try and spend just 10 minutes walking you quickly through our investor deck, which is relatively quick for our investor deck. But what I will try and do is spend the next 10 minutes convincing you that if you believe in the electric revolution that our society is undergoing and the move towards electric vehicles and battery storage for energy distribution, Conic Metals really should be a key part of your investment portfolio. And why is that? Here are the three main assets that we have inside the company. We've got an 8.5% joint venture interest in one of the lowest cost nickel operations in the world. It's a project called Ramu, been operating since 2012 and built at a total capex of just over $3 billion. And today generates substantial free cash flow. Again, it's an 8.5% interest in that operation, which actually increases to over 11%, which I'll get into at a later slide. We also have a royalty portfolio consisting of 11 different royalties on nickel and cobalt projects in Canada and Australia, highlighted by a 1.75% NSR on the Dumont Nickel project in Quebec. It's the largest undeveloped nickel sulfide project in the world, construction ready, and hopefully we'll see that continue to be advanced in the next couple of years. And then also a 2% NSR on the Turnagain Nickel project in British Columbia. It's the world's 6th largest nickel sulfide, undeveloped nickel sulfide project. Both of these royalties will cash flow about $10 million a year to Conic Metals once the projects are up and running, which is absolutely substantial free cash flow for us over mine lives that are 30, 40, 50 years. The third bucket we have in terms of our asset portfolio is over $8 million US in cash today, and a small equity investment in a public company called Minerva Intelligence. And so let's get into a few of the details on Ramu. It is one of the world's largest nickel producers, nickel cobalt producers. It's exceeded its design capacity in each of the last 3 years and is on schedule to do the same thing in 2020. And if you look on the right of this graph, just in terms of the cost profile, again, one of the lowest cost nickel mines in the world, operates in the first or second quartile of the nickel cost curve, and today has a mine life based on reserves that is over 14 years. And today, Conic Metals as a company has a market cap of just over $20 million Canadian. And when we repay our operating debt, so Conic Metals does have both operating and construction debt that's owed to the operator of the Ramu mine, which is a company called MCC out of China. When we repay our operating debt, which we expect to fully repay by the end of next year, then we start getting 35% of our attributable cash flow. And so what this graph shows you is at a $650 nickel price and a $20 cobalt price, we expect starting in 2022 that we will receive somewhere around US $7 million of cash flow. And then once that construction debt is repaid, when we become debt free, that at the same commodity prices would be over $26 million in free cash flow just to Conic for our attributable interest in that Ramu joint venture. So substantial cash flow for a company today that has as I said, just over a $20 million Canadian market cap. And if you look at a sort of an upside scenario with a higher nickel and cobalt price, you can see how we have tremendous leverage to higher nickel and cobalt prices, which we fundamentally believe will be needed as we think about that electric revolution that I spoke to. So what are the nickel market dynamics? I'll skip quickly through this slide, but if anybody's been listening to Elon Musk, and really any researcher around, there is a nickel shortage that will present itself over the next decade that should leave us short somewhere between 1 to 1.5 million tons of nickel per annum. And that is being driven by nickel demand required for primarily electric vehicles. And when we think about electric vehicles, of course, it's the batteries that are going into those electric vehicles. And this graph here, this page just shows you the expected growth in battery capacity globally. Of course, a lot of it's coming out of China, about 70% of it's coming out of China. But from where we were just a couple of years ago to over 2,000 gigawatt hours in less than a decade, it's going to put a major strain on nickel and other battery metals that are a key component of that battery. And so what does that mean? And this is a Wood Mackenzie graph. There will be a substantial shortage that comes in the 2025 to 2030 period, somewhere in that neighborhood of 1 to 1.5 million tons of nickel. And what does that cost? If you look at the capital intensity of every major nickel laterite project that's been built over the last couple of decades, the capital intensity is somewhere between $60,000 and $100,000 per ton. You can see Ramu here in the middle of the graph had one of the lowest capital intensities of any project. But if you then say we need 1 to 1.5 million tons of nickel by 2035, that means as an industry, we need to invest somewhere between $50 and $100 billion to build out that nickel capacity. And the only way we're going to get there is with much higher nickel prices. And of course, this EV revolution is impacting cobalt and copper and many other metals. So, and Conic here, we have some of the best exposure, I think, to the nickel and cobalt space of any public company in the world. And so, what's our portfolio? So as we talked about, we have the Ramu. We've got 11 different royalties that exist on projects in Canada and Australia. Important to note that when we acquired these assets, we acquired them at a total cost of over $130 million. That's $1.55 per Conic share. And today we trade around 26 or 27 cents a share. So substantially undervalued in a nickel price environment that's about 15% higher than when we acquired these assets. So going quickly to Ramu, as I mentioned before, this was commissioned in 2012, been producing above its nameplate capacity since 2017, so over 3 years, moving on to our 4th year now. Our mine life of 14 years that I mentioned before covers less than 15% of our ground at Ramu, so we see substantial potential to increase the mine life here. And as I said before, as alluded to before, we have an 8.5% interest in the Ramu joint venture, which will increase to 11.3% when all of our JV loans that are owed to MCC from the construction of the project are fully repaid. But that first tranche of repayment of the operating debt will happen or should happen by the end of next year, which means we will start receiving substantial dividends from Ramu starting in 2022. So Papua New Guinea, if you're not familiar with it, there's about 50 or $60 billion of market cap of companies that are operating in Papua New Guinea. You'll see our Ramu project highlighted here, but you have companies such as Newcrest and Harmony, K92, which has had tremendous success, all operating in country, which also has a substantial LNG presence through Exxon and Oil Search and others. So this is a resource-focused economy, as you might expect, where resources, by most estimates, make up somewhere around 80% of the GDP of the country. So it's an extremely supportive country for resource development, which has been a big asset for us. The Ramu operation itself has a mine site that's connected via a 135-kilometer pipeline to a plant that sits on the coast. operated by MCC. MCC is a subsidiary of China Metals after it was acquired in 2015, and has engineered and constructed some of the biggest mining projects around the Asia Pacific region. Ramu was China's biggest offshore mining investment at the time when it was built in between 2009 and 2012. But MCC has also built the largest nickel mine in Asia. It's built the largest copper mine in Asia. It's built one of the largest iron and steel mines in China. So this is a global Fortune 500 company, and has been a tremendous partner of ours for over 13 years. I'm going to skip through the parts on the royalty portfolio as we've touched on it quickly. Coming to page 20 here on our trading comparables, any way you look at it, Conic is substantially undervalued relative to our peers. With a market cap of less than 20 million US, as I said, it's about $22 million Canadian. Insiders and between the management and board here own over 12.5% of the company, so we're substantial shareholders ourselves, and made up of a very experienced board and management team, which have been working together for several years. And here I'll just finish up highlighting some of the disconnect that we've experienced. We acquired Ramu through an acquisition of a company called Highlands Pacific back about a year and a half ago. When you look at and you follow Highlands Pacific's share price here in the blue line against the nickel price in the red line, they tracked relatively close together. When Conic Metals listed in November of last year, almost a year ago, we came out at a substantial discount to the nickel price, and fundamentally believe that we are significantly undervalued. As you will see, management have been big buyers of the stock over the last several months. So please feel free to reach out to me if you have any additional questions. As I said, the presentation is up on our website. There's obviously a lot more detail in here than what I had time to go through. But thank you for your time today, and look forward to discussing in more detail in the near future.